This meeting is being recorded.
Okay.
Scares me every time.
Happy Remembrance Day, everyone. November 11th, 2022.
It's magic. It's 11 plus 11 equals 22.
You're very perceptive. That's why you're the head honcho around here.
That's it.
Yeah, you're just mentioning you didn't hear the planes overhead. I'm not sure if they got out today or not, but yeah. Usually a quiet day in the
Yes.
markets.
Mm-hmm.
A lot happening on the US side for sure.
Mm-hmm.
Let's start there. What did we see this past week?
Yeah, so busy week. The inflation number came in a little bit lighter than expected yesterday, which sparked a rally into most things. The U.S. bond markets, well, U.S. and Canadian bond markets are closed today, so you get kind of a quiet day in the bond markets today. But equity markets rallied and bonds rallied yesterday, with the view that maybe they're either close or done with their rate increases. And if we look at Hedgeye, they track like the what the forward guidance is, and you've got somewhere in the neighborhood of I think they'd price something like 3% still to go, or sorry, three full hikes to go. Yeah, so that would work out to be close to another couple of percent increases, and that's been cut in half after yesterday's inflation print. So with the result of that, you saw a big rally in all things that have been beaten down. So the further they've been beaten down, the more we saw rallies. So you saw growth rally hard, and a bit of a carry through, follow through today, with some stocks moving up another 5, 6, 7% today, which we can talk about as we go through. And crypto, there was tons of crypto news this week with FTX going bankrupt, so we can talk about that further into the presentation. But those are big events this week.
Right.
Yeah.
So do you think so what's happening? You want to talk about crypto? What's happening
Sure.
in crypto? Is this like a lot of the I told you so birds are out, eh?
Mm-hmm.
Is that the case here? It's just the end of crypto altogether and we're just going to start seeing everything blow up?
Yeah, I mean, just like anything, there's bad actors.
Yeah.
This one happened to be a worse one. This was FTX. They were a $32 billion company valuation last week, and they are worth zero today. So essentially, it was this guy, SBF is his short form, is the CEO and founder of FTX. He had something in the neighborhood of 120 subsidiaries within that business, companies lending to others, but the big one was essentially he commingled customer assets with his other division called Alameda, which had tokens as well. And it really started with Binance coming out. They were doing some due diligence, and Binance is another crypto firm. It come out and they had exposure to some of the tokens, and they went out to the market and essentially said, we're gonna risk reduce our business, and we're going to liquidate a position. That really set off the kind of the run on FTX, and it uncovered the fact that he was essentially borrowing from customer accounts and lending it to another division and speculating with those assets. And that is just bad due diligence, bad supervision. The thing that's probably the most scary is the individuals that had invested in FTX, with Ontario Teachers Pension being one of them. They lost about $100 million from it. So these aren't amateurs that are doing the due diligence on the companies, and I think it more points to the fact that you everybody needs to do their due diligence. Doesn't matter the business you're investing in. The thing that surprises me a little bit about it is like anytime there's a transaction on the blockchain, it's visible to the public. You can look at it and see where did this go from, who's the owners of these assets. And essentially what happened is, was one hand lending to the other, taking too much leverage, and it resulted in a panic.
Hmm.
So I don't think it's the end by any means, but it is sussing out a lot more bad actors. And as markets correct, it's that continuous reminder that you need to do your work, do your due diligence, ask the questions, find out. Like if you don't know where that money is, you need to ask them. And this will bring down some pretty serious investors. So I think it's an evolution in a deep correction.
Yeah, I mean, we've been comparing this to .com since, well, for 2 years,
Mhm.
2.5 years,
Mhm.
right? And it's pretty much
Mhm.
tracking identical to it, right? I
Yep.
mean,
Yep.
time frame, everything, like like you said, the bad actors are coming out now. And the pets.coms are going to zero. Like it's
Mhm.
all, it's kind of where it needs to go before it becomes legitimate, right? We knew
Yeah.
that.
Yeah, so Coinbase put out an email today, and they showed, we have $5 billion of US dollars in
Hmm.
our bank account. Customer money never gets commingled. It's one for one. You own the asset, similar to a bank account or investment account.
Hmm.
So they came out and really just said, here, like, this is why we're different. We're
Hmm.
domiciled in the US. We follow KYC. We do all of the things that investors do with their investment accounts,
Hmm.
and just show that they're the leader. And as we see how they react here, they rallied yesterday, but they're up another 12% today, with the view that they're going to be benefactors of this Coinbase and potentially Binance, but more Coinbase, I think, at this point.
Right.
Yep.
Okay. What else did you get up to this week? Anything in the portfolios or?
So no adjustments in the portfolios, but some of the things we have did quite well off of the rally the last couple of days.
Mhm.
And the one which I'd mentioned before, which was the KWeb, which is Chinese internet companies.
Mhm.
I think it was up 6-7% today, but up 12 yesterday. And so some of those names that we were adding to over the last couple of months, and Meta, Facebook as well, some of those names picked up here. So happy to see that. But more happy to see bonds rally hard and volatility come down. So, those two things are real positive. And Keith's comments there from Hedgeye this week said, this could be the turn in bonds, which he hasn't said before. So those are some super positive news points that I saw this week.
Gotcha.
Yeah.
All right. Well, let's get to the chart marathon here.
All right. Well, some of the things I've already we already talked about that I was going to that I was going to use, so we might not need to use quite as many charts.
Nice.
Hmm. All right. Okay. So I just thought it'd be worthwhile to bring it back to this just every once in a while, just to refresh on this, because I think it's been maybe a month and a half since we've looked at this. Just an update on GDP and inflation. This is U.S. data, and if we look at where we are, third quarter of this year, forecasting to be kind of right on the line between growth and inflation decelerating and accelerating. So we're right on that line. Q4 is calling for that quad four, which is the deceleration of inflation and the deceleration of growth. If we look at that over a couple of quarters, you're looking at negative GDP in Q1 and Q2 next year. But the other thing that I think is material is the deceleration in inflation. So while we don't go back to 2% in the second quarter of this year, we do go from 8 to likely a 4 handle in that number. So it's really the rate of change of the direction that the market cares about. So this is, I think, important to continue to pay attention to. And I don't think anything materially has changed from here. And I'd expect this number this quarter to creep down further into this category. But this is important for us to continue to track this.
Great.
So this is, as I talked a little bit about bonds, and I've been putting this chart up every once in a while, but this was the MOVE index, which is essentially the same as the VIX except for bonds. And so we've seen this historically. This is just the last 2 years, but bond volatility has been elevated, and that's made it obviously a more challenging environment for bonds. And this was a key point here we saw the last couple of days where the surprise to the inflation number and volatility cratered. And so this is a really positive from an investability perspective and something that the institutions would use when they're allocating money to bonds. So this was a key number that happened this week.
Gotcha.
Just as we go through, I've been following the COP conference, talking about just global emissions and things like that. That's happening right now in Egypt. This was interesting chart that came out of that was just kind of the other focus where we talk a lot about carbon, CO2, and the other thing that is damaging the atmosphere is methane, which I didn't realize. The actual 30% of the damage that's happening in the atmosphere right now is in methane. And so I thought this was an interesting chart that they're focusing on CO2, of course, but methane needs to come down as well. And so that it's been an interesting conference. Lots of great charts and things coming out of it, but they're working hard on focusing on how they can make some adjustments as we continue to move ahead. So the other thing, which I think I talked about a little bit briefly, I don't know if it was last week or the week before, just talking about how robotics is changing the potential workforce issue that we have, where demographics is something that we know is a problem and we know is not going to change. And so this the couple of slides here I thought were quite interesting. This is the manufacturing industry related robot density by a bunch of countries globally. And so what you probably know a lot of these things, but if you look at Korea, the actual Korean robotics, it works out to be roughly 10% of all employees in South Korea right now are robots. And so it's
Wow.
I know hard for us to believe here, but a lot of these countries are driving on with putting robots in place to replace individuals. And
That's
the
scary.
reason why that's important, obviously, from an investment perspective, it's interesting, but also helps from an employment perspective. And when we think about what happens to those employment numbers, the largest 3 employers in the United States are Amazon, which obviously a lot of those people can be replaced, Walmart and McDonald's. So, as we think about how things evolve, this I think plays a major role in jobs and potentially opportunities as well. This was kind of the last one before we talked, before I was going to go into the discussion about crypto, but we already had that talk. But technology is inherent deflationary as well. And so if we look at this from a cost per robot perspective from 2005, which is less than 20 years ago, was something in the neighborhood of $70,000 each. And that number has come down now to be roughly around 10,000. And so we just think about how quickly this is evolving and advancing. And I think it's very important as we think about how this is going to change the employment picture as the robotics companies continue to get a little bit better. They start to implement AI, which is happening as well. And this can really dramatically change the employment picture in the world.
Yeah, and I think there's a lot of tells out there, like this is happening right in front of our eyes. I went to Shoppers today, and I noticed they had taken out all of the like the manual checkouts. So now
Oh, wow.
there's There's 15 self-checkouts and 1 customer service area. That's it. So you'd go to the customer service for everything. Obviously, you know, you could go there and check out if you really needed to, but they're
Yeah.
basically they ditched it all together. Because that's a perfect example of one place. Those types
Yeah.
of places you can't get people to work, right?
Yeah,
So,
exactly.
so
Yeah.
yeah. Yeah, I was
Yeah.
surprised to see that. Yeah, definitely robots are taking over. Will Smith was right, and I Robot like 15 years ago.
Yeah, exactly.
Who knew?
It's all coming. It's all happening. Yeah, well, I think it's important. I mean, as I study this and look at it a bit more, and it's moving up the chain, right? Because because the technology is getting better and the ability to make decisions is getting better. It's gone from what it was 20 years ago, which was very, very, very low skill levels, to actually being able to answer questions and do things and make decisions. And it's wild.
It's crazy. It
Yeah,
really is.
yeah.
Okay. So that's it for the charts.
That's
Nice
it for
one
the
on that.
charts. Yep.
Good.
Hmm.
All right. So what are we looking at for this week coming up? It was a decent week in the markets, right?
Hmm.
Let's see here. What are we looking ahead to for next week?
Yeah. So yesterday was a thousand point day in the Dow.
Mhm.
I think I'd said before in one of the calls, like this year has been, yeah, I think it was the 35th or 36th day where we've had a 400 point move in the Dow. And so typically those happen into bear markets. And so we'll continue to watch it quite closely. I'd say one of the things that I'd mentioned in the past was the volumes. And what we saw yesterday was actually pretty material volume buying, which was up kind of, I think, 20-30% day over day and closer to 10% month over month. So that was a signal to pay attention to as well, because that's really tends to be a sign where big moves are happening, more money's coming in, flows make a difference for the direction of assets. And so with a big volume update yesterday into a real positive CPI number, I'll continue to watch that, see if we correct here again. I don't think we're completely out of the woods from a market perspective, so I'll be patient now. But I was most happy to see what happened with bonds, and I'll continue to watch that quite closely next week. But no material. There is CPI number for Canada next week, which will come out. But from a US data perspective, this week was much bigger.
Gotcha.
Yep.
Okay. I don't think there's any questions. Anything else you want to touch on before we go?
I'd say the last one, which is did have a few questions about gold this week from people. Gold had a pretty material rally yesterday, and again, that's the inverse of rates and US dollar. So, as rates corrected with the view that maybe we're not going much higher from a central bank perspective, you had gold go in the other direction. You saw kind of a $60-70 move in gold. And so as we've talked and looked backwards, this is typically a time where gold and gold companies do well as things start to go in the other direction. I don't think we're there exactly today, but this was another thing that we'll watch and pay attention to and see if we need to make any adjustments there.
Gotcha.
Yep.
Okay, sounds good. It's dark out already, which is weird.
Yeah.
Hey, kind of
Yeah.
rainy. So we've
Yeah.
been blessed with the good weather. Hopefully, I
That's
think it's supposed to stay warm this weekend, isn't it? Stay warm, I think.
it. Tomorrow morning, and
Yeah.
then potentially have some snow Saturday night, Sunday.
Oh yeah, that's right. Snow. Oh my goodness.
Yeah.
Better get that gazebo down in the backyard, eh?
That's it.
All right. All right, everybody. Thanks for joining in, and we'll see you next week.
Sounds good. Thanks. Take care.
Bye now.